Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002. We're coming up on our 23rd anniversary in a month. So I'm happy for that. We've got our website here, and if you want to join me and a great group of traders in our live trading room, go over to drstoxx.com, click on the subscribe menu, scroll down to live trading room, and you'll be taken to the page where you can order that. If you want to add on our newer service, live options room, where we only trade options, mostly long calls and puts, a handful of spreads now and then, and some income plays as well, you can go to the live options room and you can add that on for 40% discount. All right, I don't have a whole lot of time today, so I want to join the index charts real quickly and give a good look at what's going on in the overall market. And as you can see, I just said this to the folks in the room, the market's not doing a whole lot in terms of trending action right now. We're really basing. We've had a very nice run off of the April 7th tariff panic low. And I'm going to go out on a limb and say that that date, April 7th, marks the beginning of a new bull market. April 7th marking the end of let's say, a modestly bearish period for the market that began back in March of 2022, when the Fed started hiking rates a little too fast and furious for the market's comfort level. And we did have a proper bear market in 2022, kind of a weak recovery 2023. And then we had the election and aftermath, and things started to get more bullish until Trump came out and I forget the name of it, Liberation Day. He did his Liberation Day speech, and everything was straight downhill from there. I think that's kind of the last gasp of the bears to wrest control from the bulls for a longer period of time. And it's a new bear market. Bull market, a new bull market, which tend to last 4 or 5 years in their healthiest form. So I think we're just kind of getting started. I don't have too much of a fear that we'll be, 15, 18% off of the highs here by the time we get out to the more bullish part of the year. But I do think that this month of September, things are going to be a little trickier than they have been. And by that, I mean something more like a trading range, which is kind of what we're seeing right here, right? Sort of a sideways base at the top of an uptrend. It's a form of consolidation. It's a way of allowing valuations to catch up with their prices. And they do provide these periods of consolidation. They provide some pretty nice entry points if you can mark out areas of support and resistance. So we tagged yesterday. This was Tuesday yesterday, the 2nd of September, the first trading day of September after the Labor Day holiday. And it was a pretty nasty day, right? It gapped up a little bit on the open, and it was all downhill from there. We hit the 50-period moving average below the LRC, and then it started rallying back up nicely off of that, closing near the 21-period moving average. Today we gapped up again, but it's also now because of some stuff going on with a Fed speech. Kashkari came out a little more hawkish than the market wanted him to be. I think we're getting a little temporary glitch in the otherwise consolidative move that we're seeing in the overall market. So maybe a few more days of this, kind of feel like the market is ready to be a little bit on the softer side for the next few days, but it's not really a shorting opportunity with a couple of exceptions, which we might look at here in a minute. But it's not really a shorting opportunity. It's more of a wait for the price to come to your level opportunity and buy the dip. That's where we're at. That's the S&P. Here is the NASDAQ, pretty much the same thing. You're going to see this consolidative trading range up here at the top. It's just flat, right? A few days up, few days down, few days up, few days down. A lot of choppiness, a lot of churn, a lot of shares trading hands without much happening to the overall indexes. So when you see the indexes flat, you got to think that's pretty much a function of the bags, right? The big 7 stocks at the top of these weighted indexes. So they're probably themselves, which is true, not doing a whole lot. But that doesn't mean that there aren't really good opportunities further down the list in some of the smaller names or the unsung heroes of the small cap index, for example, or some of the niche indexes, cloud and ARK Invest and things like that. So you still find some really good opportunities out there, and I'm going to show you a good list of them in just a minute. But first of all, just to get a handle of where we're at with the overall indexes, it's kind of chop suey right now, and probably will be for the next few days. Now, here's something to worry about. If you're inclined to worry about the stock market, I don't think you should, but there is a bearish pattern going on right now in its formation. Here's your left shoulder, here's your head, here's your right shoulder, and it's not a poorly formed formation at all. It's just that it hasn't violated the neckline. It did try to do that yesterday and then bounced right back up again, and we're still in the upper 50% of that range of yesterday's range today, even with some volatility going on here. So, and in fact, on the NASDAQ here, we're just above and holding, like we did yesterday, the 50-period moving average, which is rising. And we still have stacked MAs, right? Even with this cooling off over several weeks, we've got the 21 above the 50 above the 200, and that's a bullish posture for the overall market. You can also see the LRC is in nice 45-degree angle trending pattern, also good. So no major worries yet, but if we get a close below that neckline, I think I've got it just about where it should be, then we can start to look at a pattern target, but we're not there yet. And here's the other thing about a pattern like this, very important to remember that you can take the same price chart and apply some different lines to it, and you get something that looks a little more bullish, right? This is a symmetrical triangle in an uptrend, typically a bullish pattern. It's not a completed pattern until it breaks out to the upside, right? You've got the STL down here, the supporting trend line. You've got the RTL up here, the resistance trend line. You get a break above the RTL, you've got a bullish buy signal. If it breaks below that, which is what we don't expect to happen, but if it does break below that, break support, then you can start to talk about some downside targets. But we're not there yet. We're close. I have to say we're close. And it sure looked pretty scary yesterday. But the nice bounce right back up into the close yesterday. We had some very good news overnight with Google and Apple and Facebook. And a little bit of follow through on that today. Not a real strong day, but, you know, hey, the market is not just 3 or 4 stocks. It's several hundred stocks, and not everybody is real happy right now. Small cap index. So we did get kind of triggered into a short-term long in the small cap index. I think we'll still be okay with that, right? We've got a little 3-bar pullback in a nice looking uptrend. It has been outperforming. You can see that the way the 21 is rising as opposed to rolling over for the NASDAQ, the price is above the 21 as opposed to tagging the 50-period moving average for the NASDAQ. You've got outperformance in the small caps. And when you see that, here's a good tip, right? A trading tip. When you see a stock or an index outperforming and you get a little bit of a pullback in that, buy it, right? Buy it. Don't go crazy, but just start to nibble on some shares. I think if we drill down here to the 2-hour chart, you will see also that, although it looks like a little bit of a nasty head and shoulders top forming here, but as I have said many times, head and shoulders tops are very unreliable, and very often they roll over and break out to the upside rather than to the downside. And I think that's kind of what we're seeing here, right? A sequence. This is the 2-hour chart, a sequence of 2 higher lows forming a higher high. So we can right now, if we want to, which I want to, we can say that this is, after a pullback, the start of a new uptrend for the small caps. So we're not looking for a whole lot of upside movement here. We're not looking to hold this longer term, but just maybe as an outperforming index against the NASDAQ, we can watch this one print a little bit of money for us if we're good. Now, let's look at a couple more charts, because the big star of the day in both of our rooms, the options room and the live trading room, we've got positions on in both rooms in Bitcoin and in Ethereum. And both have been pulling back for weeks. We've been hearing news about people selling in big size. Despite what Tom Lee comes out about every other day and gives us some great, huge number that he sees both of these things going to soon. Despite that, we have been in sort of a big pullback mode. And the Bitcoin it especially has been a difficult hold, right? It's been up, down, up, down, up, down with a downtrend in evidence. However, today is a signal reversal. It's not a completed pattern yet, but we've got the falling wedge, which is bullish when it breaks out to the upside. This green box right here is a very strong line of support and resistance, right? Former resistance, now support. It has held, and we've got today a break, potential break above the resistance trend line. Now, in order for this to be a confirmed bullish pattern, we need to see another day of upside outside on top of that box. I would really like to see MACD form a buy signal below the zero line. That's very, very bullish. And we're getting close, probably one more day, to an RSI buy signal above its 21 EMA. So when those three things happen, and we're also seeing some good volume coming in, right? Here's a bullish accumulation day, bullish accumulation day. When we see those things start to happen, even as the thing is falling, we're in a good position. All right. I'm long-term bullish Bitcoin. I'm starting to become long-term bullish on Ethereum. Let's take a look at that. So 4,400 was the big number that it kept flirting with, right? It would get below for a couple of days and back above for a couple of days and below and above, below and above. It would get a nice, really good green stick to new all-time highs. I think those are all-time highs. Maybe, maybe not. Well, long time ago. Maybe. Ethereum hasn't been around that long, has it? This is a futures contract too, by the way, so it probably doesn't go back as far as any previous high if there was one. Big green stick, big volume, got slammed right back down the next day, back up again, back down again, and now we're coming into an apex, which is where it was a few weeks ago, and out of that apex, it shot up very nicely. I'm expecting a similar move to happen very soon. We're not above that wedge just yet, but we're right up against the top, and that's where you want to be. Take a quick look at gold. I think gold has been on a tear. I've totally missed the move, and my fault for missing it because this was a nice little buy setup right here. This is the kind of thing I'm talking about with a falling wedge, right? Falling wedge, breakout, sideways turn the next day. Here's your confirmation day on very good volume. And that's what we'll be looking for with both Bitcoin and Ethereum. It's a very sweet move. It's a little bit strange because, for example, today the market started selling off on this hawkish tone from one of the Fed governors, and gold does not like a hawkish Fed. It also doesn't like a strong dollar, and we've seen the dollar rallying back after, it's been weak for a while, but it's been rallying back if I can find it. Where is my dollar index? I'll just type it in here, UPP, or is it UUP? Sorry, UUP. Yeah, well, it's not really strong. It's not really weak. It's just kind of doing a whole lot of nothing. But gold tends to rise when the Fed is dovish, rates are coming down, and the dollar is falling. It's a safe haven against a weak dollar. And the dollar's not really doing much of anything, and the yields are still high, and the Fed has been kind of hawkish. So what's going on with gold, I don't know. But if you were to look at long-term trends, and if you're looking at probably the most crowded trade in the market right now, it has to be gold. I think gold is probably very, very close to a top. And I think that's going to be good for crypto because when people start plowing out of gold, taking their profits, getting out of that crowded trade before it starts to drop in earnest, you're going to see that money go somewhere. It's either going into stocks or it's going into bonds. Doubt it's going into bonds, or it's going into Bitcoin. So I think that's probably where it's going to go. All right, let's take a look at my greens list. That's enough on the indexes. Just a couple of quick look at indexes. I think we need to be a little cautious with banks. They have had a nice run. But now we're starting to see a weakness on a price level with some distribution in volume and coming near to a bearish crossover above the zero line on MACD. We've already got a bearish crossover in RSI. So are banks going to crash in the next couple of weeks? No. Are they going to cool off a little bit? Maybe just go sideways for a while above the 50 period moving average? Probably so. I'm just saying it's not a good place to look right now for new long positions. And the other thing I would also point out is the same for energy plays. In fact, some of the biggest put positions today were taken out on the big oiling companies, right? CVX and XOM and others. So we're seeing a gap down and a big follow through below what was formerly resistance, now support, but it's no longer support. And I think our next target for the XLE index is down here around 87.35. The 200 period moving average, maybe as far as the 50, which is 86.60. And if you want to take a short-term trade and leverage this, you can buy ERY, which is your 3x bearish version of the same sector. All right, that's all for that. Oh, I'm sorry. One last thing. I lied. One last thing. Take a look at the staples sector. The staples index been very, very weak, right? It came up here, got slashed on Walmart earnings, down, down, down. This is Walmart, Costco, Pepsi, Cola, Procter Gamble, Clorox, Philip Morris, right? All the stuff that people buy regardless of what's going on in the economy, right? That's why they're called staples. And it's got some very good stocks in that sector with a lot of deep value. Target, I think, is off my list. Costco, I think, will have a good reversal soon because the stores are still packed. We just joined Costco a little bit ago and said goodbye to Sam's Club, and I think a lot of other people are doing the same thing. Costco, Walmart is also one that I really would like to get us into for a good swing trade. I think it's coming to an end, this pullback, and discounting, I'm not exactly sure what. And Dollar Tree, Dollar General are also in that space doing really well. So keep an eye on some of those staples names for some swing trades that we can leverage with calls. Okay, my greens list real quick. 227. I'll go to 240. So now, if you want to start typing in over in the main room, trading main room, some ticker symbols that you want me to look at. I probably can't get to all of them. I apologize, but go ahead and start typing those in, and I'll take a look at those in just a moment. All right, so this is worst to best. I actually had ASTS on my watch list this morning for a bullish move, right? It came up out of the pink zone into the RTL, shallow pullback, 3 green days in a row when the market's falling. All of that's good. And then it's just a gap and crap all day long. So it's not ready today. We do have a fresh MACD buy signal. We have a failed RSI buy signal, but we're down here in the pink zone. I suspect that a reversal back higher and a higher low than this one, right? We don't want to violate 4172. A higher low and then a crack of that RTL would be your buy signal. MSTR, I got in this one a little bit too early. We got in some positions yesterday, MSTX, and it turned out to not be the day. But the thing is, MSTX was green yesterday and everything else was red. Almost 80% of all stocks were down yesterday. This was an exception, and Bitcoin was starting to get perky, and this is a play on Bitcoin, right? MicroStrategy. So I think this would probably play out. I'm not exactly sure why. With Bitcoin doing nicely today and MSTR not doing so nicely, I don't understand the disconnect. We've seen this disconnect before, but it is down in the pink zone, and it just needs to get back up above the 21, the 200, and that RTL. Boost, watch this one for another bounce off of the 50. It hasn't done it yet, but last time it got down here into the pink zone, it rallied very nicely. I really like this one, KTOS. It is not playing out the way I thought it was going to today, but it's a nice looking wedge. As long as it holds above that STL and gets back up to the RTL, I think you're going to see a breakout very soon. This one as well, BN, was a big buy for hedge funds. This is a nice looking uptrend. It's not a strong trend. It's not a big mover, but this is a soft pullback into the 50, the 21, stacked MAs, uptrending LRC, fresh MACD buy signal, very good accumulation on those green bars. And it was a valid RSI buy signal. It has failed with today's pullback, but keep an eye on this one for more of a bullish close in the days to come. I don't know this one. This is a generic drug maker, very good growth, almost profitable. It should be profitable very soon because it's been just ramping up its EPS for about 4 or 5 years now. And I really like this one as a potential bounce off the 21 in an uptrend, and then a break of that RTL. PLTR has been patient hold for us. We were long PLTU shares in the live trading room, and it came down here, did a flip reversal, got up to the 21, back down again, forming kind of, if you look at the hourly chart, you'll see the double bottom pattern here with bullish divergence. All that's good. It's just that we're kind of waiting for the rest of the market to be a little bit happier, and this one should get back to leadership quality very soon. Let me see. I like a Micron here, doing sort of a continuation pattern of a inverted cup and handle. This is a stealth AI play. I like to call it that. And a lot of companies are turning to Micron now as it shifted from old tech to new cloud-based AI tech. Its services products are coming in to strong demand, and I think it's got a very good future. Just waiting for it to get back up here to this neckline. What else OKLO, we did some calls in the options room this morning when it got up here to tag the upside of the RTL. And then like everything else today, it has coiled back down. But as long as it stays in, and it had a very good day yesterday. So that's a big plus when everything else is falling and it's rising to at least get back to break even and a back above the 21. This is just a matter of time before this really cracks to the upside because of the data centers, right? Facebook, we've got some FBL in the live trading room. It's been not doing a whole lot of anything just yet, but we're getting close to breaking out of this pullback RTL. HWM, Howmet Aerospace, is the best of breed in the aerospace industry, and it's been in this very soft little ABC pullback, right? A, B, C, and then we're just kind of waiting for it to get out of this trading range, really tight little trading range there, down in the pink zone, 21 period moving average. Everything looks good. We just need a little bit more juice in the price. We're long PRCH calls. It's been a great position for us. When the market was selling off yesterday, this one was breaking up to new 52-week highs, maybe all-time highs. It is a software play, and I'm forgetting what the unique thing about this is, but it is in very good shape, and it's a very strong chart and a very strong growth name. We just got in. We got in on this day right here where things started to look perky and a breaking out of trading range, and it was a nice follow-through day yesterday and a good confirmation day today. This one just looks great. Love it. Absolutely love it. One of our better trades in the last week. Reddit is a wait and see, but it is nice rounded bottom off the 21, 50, not the 50, the midline of the LRC. Tagged, like everything else today, tagged these RTLs, which is why it's so important to put these on your chart. I tend to buy below them and then add a little bit more if it does break out. But when it really is flashing breakout like it did, like a lot of stocks did this morning, and then recoils back down on the inside, there's not really a whole lot you can do about that. If you put your stops in the right place, you're okay. You just have to be patient. A lot of trading wins come from sitting on your hands, right? Here are your hands. You got to sit on those guys. HNGE is a new one that I found today. I really like this a lot. This was triggered by, my interest in it was triggered by some unusual call flow. And we got in it. I think we're in shares in the live trading room. Too many trades going on. I have 2 trading rooms and 2 daily stock pick letters, stock and ETF letters. And between all of that, I tend to forget who's buying what. Anyway, this looks great. It's an IPO. It's in the same space as Oscar. It's a kind of a disruptor in the medical information technology space. And this one has some really good numbers, better than Oscar. Forget Oscar. I like this one a lot better, and had some good call flow. And this just looks great, right? This is the kind of thing you want to see. You want to see a lot of green bars. You want to see the volume bars are higher on green days than on red days. And you keep holding things like the 21 period moving average. Your moving averages are rising, and you keep banging up on this RTL. The more times you knock on that door, the more likely it is to open. One more is DoorDash. Here you go. Here is a official breakout of the RTL today. So let's zoom in a little bit. Oh, shoot. That's not zooming in. That's the opposite. There we go. Okay, so if you look down here, right, the 200 is way down here. The 21 is above the 50. 50 is above the 200. You've got MACD coming down just to the 0 line. And then you've got the RSI buy signal just about ready to trigger. And you've got price leading the indicators with a couple of good, I wouldn't necessarily call these big volume days, but they are bigger than the day before, bigger than the day before. That signals accumulation. And all we need from this one is a good follow through day, and then we can get long. This is a good moving stock. It's a great one to play calls on because they're very liquid. And I think we'll probably be in some dash calls by tomorrow or Friday. All right, guys, let me take a look to see what you're interested in, if anything. All right. Well, I'm not sure. I see a couple of names here, and then I see a bunch of charts by Ace. Ace keeps posting charts and then covers up what you're printing. Let's see what Zscaler looks like. So I think this one had earnings. Yeah, it had earnings the other day. They were pretty good, but as I read the headline, good but not great. This is in the cybersecurity space, and there are some leaders in that space. CrowdStrike is one we own, but they've been kind of tepid, right? They're down here not near 52-week lows by any means, but they're down at the bottom of a long pullback. You're going to see this in Fortinet, CrowdStrike. Palo Alto is doing a little bit better, but as just on a pure technical basis, forget the fundamentals, forget the earnings. I would say this has the same potential as a lot of the charts we just looked at as a pullback breakout. You want to see it get up close to that RTL. You also want to see a lot more green volume coming in. This is a lot of distribution, but sometimes distribution, heavy volume on the outside, on the outflow, can lead to a nice reversal. Maybe not always a long-lived one, but at least a good bounce back, because everybody who wanted to sell has sold, and then can only go up. I keep an eye on it. It's not a buy here yet. I would wait and see if it can get back up above the 21 before I get interested in that one. UNH. So we do have UNH. We're down at an average entry of about 270, and here it is at 306. So we're doing okay with our positions so far, up about 12%. But it's been in this really tight, flat base, which isn't a bad thing. It's a good thing. It's just consolidating the move off the lows, but it's also kind of a frustrating hold. If you're looking for a quick turn trade, I wouldn't go with this one. The ones that are already trending and showing good price action day to day, those are the ones you want to swing trade. Longer term position trades like the one we're in with UNH require patience. Best to just put it in a different account and don't even think about it, and check once a month, something like that. So UNH is one of those. If you look at let's look at the 2-hour chart, you're going to see there is that base. And if we go down to look at volume, it's a little bit on the mixed side, but maybe some bullish volume coming in more recently. And there's no real indicator here that this is ready to break out anytime real soon. So yeah, it's a hold. It's a hold, and I think a good one because the valuations are worth holding on to. Let's do one more. Rocket Lab. Okay, so Rocket Lab. So over in the options room, we've been in this one several weeks now with a wheel play. We started by selling puts, then we got put shares. Then we went 2 weeks of selling calls. We got called away, and then last week we did another put right. We're under our strike right now, so if we don't cover that put right, then we'll be put shares again. But our overall cost basis is down around $39 per share. So I'm not too worried about this one putting us into some shares. We'll turn around and sell some calls. But I don't recommend this one as a wheel play. It's a little more volatile than I realized getting into it, but it's paid off for us, so I'm not concerned. Yeah, I do think that this has a very good future as a growth play. It's in the it makes the rockets that send satellites up into the atmosphere, and it's got a unique line there that is very much in demand, and I think that probably some government applications of that are in order or will be coming soon. So I think it's got a very good future. The CAGR, the accumulated growth rate going forward for this one is very strong. So this is probably going to tag the 50-period moving average. It's down here in the pink zone already. It's probably going to do a nice little reversal in the next few days. Maybe next week would be a time to look at swing trading this one, but not with this big red stick, right? You don't buy a big red stick and you don't short a big green stick. You just let it play out for a few days and then go from there. All right. That's all I'm going to take, guys. I'm going to wrap this up. I'll produce the video, put a link in the main rooms, and then we'll go from there. We'll trade the rest of the day together. God bless everybody. Have a great rest of the afternoon, and we'll see you soon. Bye for now.